investmentstrategy.com.
Hi, this is Chris again, taking a look at the upcoming Tuesday, September 16th trading session in the economic calendar. You can see we have quite a bit in the way of announcements coming out of the UK. Going to be a very interesting day, though, because even though we have a couple higher level events, PPI, CPI numbers coming out, I really don't think that we're going to get a massive amount of move based upon these announcements, because there's really only one game in town right now, and that's, are the Scottish staying or are the Scottish going? Truthfully, we won't know that till Thursday. But right now, when you look at the CPI year-over-year number anticipated to be 1.5%, it is possible it could move the FTSE and the British pound. Probably not looking for major moves, but we do recognize that there is the potential for that to happen. German zoo conditions at 40 and German zoo economic sentiment at 4.8 could move the DAX and the Euro, and it will be a little bit more independent of what's going on over here in Britain. So that could be a little bit more of an interesting situation. Later in the day, the United States has a massive amount of announcements. That being the case, of course, PPI, at 0.1% and PPI month over month at 0.1% could move the markets. Probably the stock markets, really. A lot of these are pretty mellow and minor. We do have crude stock, API weekly crude stock. That will affect the oil markets, of course. Any rally in oil, though, is probably an invitation to start selling. The PPI numbers, if they are better than anticipated, could put a little bit of a fire underneath the S&P 500, which, of course, we believe is going to continue to find buyers. And if we can get above 1990, we are bullish of it. But with that, let's take a look at a few of the chart. Okay, looking at the euro dollar, you can see that we do in fact have a bit of resistance up here at 130. So any rally in the euro dollar will more than likely find quite a bit of selling pressure there. In that case, we would buy puts on negative resistive candles. On the other hand, if we get above 130, and it is very possible, I mean, we have sold off pretty drastically. We feel that 132 will be targeted, maybe even 132.5, which is the top of this gap. If that's the case, we get a daily close above 130, or at least like a 4-hour chart or something. Buying calls above 130 might be the route to go. Looking at the pound dollar, you can see that we drifted a little bit lower during the session here on Monday, and not a huge surprise because there was a gap here at 163 that should show continued weakness. Of course, the biggest problem that I have with that is if you go to the weekly chart, you can see that we did in fact form a nice looking hammer. Basically, right here along this move, that is the 50% retrace number right around 160. So if we're going to see a breakout to the upside, it's going to be here. And with the Scottish referendum, we could have people front running that vote in the next couple days. So because of that, I am more apt to buy any puts for short-term trades only. I mean, even ultra short-term trades, possibly even things like 60-second options, that kind of thing. A lot of selling potential, but once we get above 163, things could change rapidly. And looking at the S&P 500, you can see we have drifted a little bit lower. We continue to drift and form a hammer here. At this point in time, if we can break back above 1990, though, we are buyers of calls heading back to 2010. Good economic numbers out of the United States could exacerbate this move and have us going higher. With that being the case, we are bullish, but recognize that at this point in time, we've got to get over that 1990 level in order to feel free and clear. And with that, I have looked at the Tuesday, September 16th trading session.